Here we are looking at the model book. We are looking at Catalyst Metals this time. We've had a few requests to change it up a little bit, and there was a lot of interest in the bar by bar. So we're going to understand this company from a momentum trader's perspective. We're going to look back to see where the initial setups are, where the cues were to enter this company and ride it for a long part of that rally. We're also going to understand how does that cross over with the news? Was it added to indices, or it was? And how did that help push the share price on? Plus, the things that we look at on a Friday, which is the momentum leaders and the launch pad. Did it enter those lists? And when it did, what did it look like? So, Gary, it's a gold miner. We know that much. Can you tell us a little bit about the climate that we're looking at here in the context of gold miners and the market itself?
Yeah, so we know it was the spot gold price was pretty firm there, sort of, I think, coming out of, I think basically sort of that late 2023, it did break a little bit of a cup and handle, the gold price there. It sort of came through around 2080, something like that. It poked its head above, then it sort of congested underneath, and then I think by early 24, it was coming through and going to a new high, and that was sort of when gold, like, it broke out, but then it didn't go on with it, and then it stayed nice and tight, and then I think by March 24, it had broken to a new high, and that was like a pretty good sign for gold, that it, particularly after sort of congesting under the high for a period and breaking out. So that was the climate there for gold stocks. So we saw a lot of gold stocks coming out of that. I remember there that that October 23 low, we saw the gold stocks were some of the stronger names there. So I remember when we looked at the model books and stuff there, we saw which stocks were showing the greatest strength coming out of that low, and definitely the gold stocks were definitely showing strength coming out of that that October 23 low, which sort of followed the October 20 low, which was October 22 low, which was the major low. And then there was a March 23 low as well, which was important for the market. So those are sort of like, remember, October 22 was the big low, March 23 was the first high low, and then October 23 was the second high low in the market. So the thing we know about leading stocks is that when you sort of do go through corrections there, we're looking for the stocks that either, one, fail to to sell off as hard as the market, and they hold up better. And secondly, the stocks that come out of that low, the hardest, are the ones to follow as well. So that was definitely the case for gold stock there. The gold stocks came out of that October low pretty hard and pretty buoyant there. And let's say that October was actually the false break almost on gold, but the congestion there with the stocks was still pretty firm then. I think the big cat, this one, that's where I was that change. I remember Hancock. They did a sort of cap thing there. I think they paid down a bit of debt, and then they sort of started to look at other players and then ramp up production there. But I remember sort of reading there that Hancock Prospecting was taking up their full
Location.
Yeah, it's a good sign that Gina's taking a stake here. That's yeah,
Vote of confidence.
Yeah, that was just around that March, April. I think it was around April 24. That was just as the stock was sort of starting to come out of a bit of a longer sort of downward sort of channel there. So it was just starting to come out then.
Well, that's a good background to know that it wasn't just a rarity and the company running by itself. It had the full background of the commodity itself. The commodity was running, the rest of the miners, and then behind the scenes, there was a bit happening. It wasn't just a gold mine not doing much, not just exploring or producing. There was a fair bit happening on the corporate side. And that's where we can probably look at from the company's perspective. So we know they're a gold explorer and producer, Victoria, Tasmania, Western Australia. Currently, it's about 85,000 ounces per year coming from the Plutonic Gold Belt operations. And that's been critical in the last couple of months, the updates coming from those operations. So what they have done is they sold the Henty Gold Kaiser Reef project, which was $47 million Henty Gold mine acquisition. And then they kept a few royalties and that kind of thing. So there have been corporate changes in that sense. But the key takeaways are that they had their strategic pivot. So they divested the Henty gold mine so they could focus on the West Oz operations that you're talking about, raising capital and clear some debt. Those operations they had acquired, and they had acquired it about 20 months prior to when their announcement was of turning it around, is it was loss-making, and then suddenly it was profit and in profit territory. They kept their processing solution. They continued exposure through some of the Henty that they kept, so a bit of a uptake agreement or a bit of a royalty. And then they did have exploration success in their Tanundra Tomorrow zone. So like you said to me before recording, they had a fair few things going on, both technically and fundamentally or corporate action-wise. Now, the divestment, we tried to look, when we've done these model books in the past, sometimes we found some news like we did recently with NTM, where it was very clear there was a large change in their industry, and it showed on the chart. There weren't as many that matched up here, but like you alluded to, there was a good backing and a good cornerstone investment and vote of confidence. It does help investors push the share price along. But they've forecast things like increasing their production to about double their production in 3 years' time. And the mines from the date perspective, and we're looking into the last part of 2024 into 2025, which is going to be another chart. So you can sort of see it dipping down on the chart that we've got on screen. So December coming down to a March low. They hit a low before the rest of the market, like you were saying, and then they just kept on going. So with that, they had the late January, they had early February market updates and presentations. They were out presenting, talking about their production updates that were announced on the 9th of January. So that kind of showed a couple of bit of an uplift for Jan 2025. Then the 14th of March, they had their first ore from their Plutonic East, and then they're working their Plutonic gold belt that was 20 months prior to the purchase. And they had 3 old mines that were then coming back online and getting into operation. And they had an old highway acquisition in May 2025. They acquired that for 32 million, and that will add 35 ounces of annual operational production. Then also in May 2025, they had a $150 million institutional placement. It was at $6. The share price was about 10% higher before that was announced. So that's what's happened with it. There was one other key point, which was they were added to the ASX 300. And that announcement does increase the universe of particularly institutional investors that will start looking at it. And that was on the 7th of March, 2025. But there's a bit of the news that happened with it, but this one's really heavy on the chart. It is very much what's been happening on the technical aspect. We have the gold backdrop. There was news happening along the way, but we didn't see that it was like a Spartan Resources where it was continuous announcement that really helped push it on. And same with Findy, it was just consistent market updates that kept surging with the price. So when you look at this chart, you were talking about it becoming a momentum leader and launchpad, and that's what was happening with the market at the time. I'll quickly show this just for 2025. We've got it on screen. We've got the momentum score at the top, which is the purple line. It does go through fits and spurts. But what we're really interested in here is when it showed up on the launchpad. These are the blue diamonds that we can see on the bottom chart here. It showed up a little cluster about 4 or 5 days within a week or so on the launchpad. And that's when Gary's looking through the list and saying, oh, there's a lot of gold companies here this week. Once it hit the launchpad, it was consistently these orange X's, consistently a top 30 momentum company for many months on end. And that's really, I guess, what brings it into your scope for wanting to look at this on a model book, Gary. So that's how it performed in 2025. You've gone back and assessed it to show us this chart from sort of mid 23, all of 24, and then to where we are. What stands out to you in this chart when you start looking at it from a technical perspective?
Yeah, I mean, the stock had sort of gone through a bit of a contraction there for a few years, sort of heading into 23, 24. But really, it wasn't until, there's a change in structure there. Obviously, cap raise, a bit of a strategic move in the company there, started buying a few assets, and then those production numbers kept increasing all the way along. So, there was definitely a catalyst for change there to the company. That was sort of and I think also when you see the major shareholder get involved there, it's quite good. I was just kind of, I think I mentioned it earlier, sort of, you know, BME taking a stake in 40X, that something like that can be a bit of a game-changing announcement, sort of it doesn't seem like the biggest news, but it can be a vote of confidence for the market that, hey, it's a pretty serious company. They're taking a stake or getting involved. That's, yeah. So,
And they're industry experts. They're kind of competition or people in that space know it better than anyone else. So if they're going to deploy their capital, not internally, but actually into another company, that says a lot, doesn't it?
yeah, no, it does. It does. I mean, it's a bit like, David Teo sort of moved from, to TUA, so it's the Singapore Telecom, so he's gone from TPG to Brokers Connections. All of a sudden he's moved to TUA. It's like, what's he doing there? And then that share price had a major catalyst for change there, and then it ran pretty hard there. But I guess that sort of stock there, so that was also occurring there around that March, April sort of period there, and then so that sort of combines with it actually eventually breaking out to a new high there. So did break a 52-week high in May, but then it sort of did have a bit of a pullback there, sort of twice. But that whole congestion there did come back and just sit on top of that previous high. So looking at the daily chart there, we saw that, it had run up to a new high there, but then sort of came back. And so that's the one thing I've sort of started to look at there more so now, because I used to look at those sort of like the cup and handle can be a lower sort of cup, the handle length, or it can be slightly higher, it can be a slightly higher handle as well. So from what I've seen, Chris, that sort of, they both can work pretty well. So in the past, if I'd sort of saw something go to a new high and then fail, I'd be worried about that. The false break and stuff, that can be a negative action there. But then once it sort of started to firm up here, so that's really, for me, breaking out little B wave there, that June, that sort of first lower high year, that mark there, that would be a good sign there. So that's probably the first little trigger, because then you've sort of gone the 52-week high, then you've sort of pulled back, you're set on top of the previous high there, you've got a nice little handle in there, it's a little 3-wave handle there, and then you break the B wave there as well. So by late June there, you're sort of coming through that 110 level. That's probably that's really the first trigger. And then breaking, you get another little, it's funny how you get those cup and handles within cup and handles setups. You get a nice little congestion here under 120, and then it breaks that level as well. So, if you're able to add a little B wave around the 110, and then maybe add to it on a break of that high 120, that'll be that's probably your really good sign there. And that's the thing. Most people are afraid to buy new highs and avoid the sort of strength, whereas the professionals are actually looking to buy that shallow strength. Go to a new high, sitting on top of previous highs and breaking out to a new high there. So, they're buying on a shallow strength there. So they're not buying the pullbacks. They're usually buying into, breaking pivots, a pivot point, or breaking to a new high as well. So, so it's interesting here, this sort of stock, it doesn't really, like a lot of our momentum sort of stocks, they generally can hug the 10 if they're really strong. This one sort of does initially and then breaks below the 10 and breaks below the 20. And then it runs again. And then it does break below the 10 and the 20 again. So, so it does tend to follow the 10 on the short-term momentum there, but it does break the 20 there. So, and the 50 is a long way back. So this is a sort of stock which was probably not really showing any particular preference to any of the moving averages too much here. So what's kind of more important is seeing the lower high, lower high, lower high. You can sort of see each sort of pullback there, it's held the low in place, then it has a bit of a pullback, holds the low in place, rallies again, holds the low in place. And then the last thing on the chart there is you definitely see like this little 3 thrust, at the high there. So that would be a concern for me, seeing those 1, 2, 3. Yeah, that's how you can get that. A topping pattern will come in with an overlapping top, because strong trends will sort of, they'll sit on top of each other. Then you get spacing there when it gets really strong. And then once it starts overlapping like it did there, that's a sign of the trend actually losing some momentum. So if I'd seen that, if I'd sort of was long that stock there, I'd be tightening right up here. I'd want to be tightened up to that last pullback there, which is around that sort of 265, 270 level. Yeah. So that, because I'd be worried about that being what we call a little three thrust high or a overlapping top there, because that is showing momentum there. So that, so if I was in that, I'd be worried about that breaking down there. But it's interesting to see what does actually follow. This is the thing about momentum sort of studies and traders as well, is we want to try and scale into positions on strength, and we want to add into more strength. And then we want to take a little bit, de-risk some into some heat, and then try and stay with the trend for the rest. So, but if we try and learn from the stock, what we've learned from this stock is that the 10 and the 20 aren't that meaningful, and that it's probably more important to sort of stay with the trend, the series of high lows. You could use a 50, but the 50 seem to be a long way back. So maybe something between 20 and 50, maybe like a 35 might have been, which is unusual. That's not what momentum tries to do, but each stock, I think, has its own personality, Chris. So we do, it's important to learn that personality. And we're seeing with Drone Show, which has been an absolute tear, that's hugged the 10-day moving average all the time. And then we saw it with Spartan, that was on a tear as well, and that hugged the 10. Other stocks like a TUA, I think, might have hugged the 20. I think Nuix hugged the 20. So certain stocks there will sort of hug one or two of those sort of moving averages there. But you can see this one here, it's unusual. It doesn't actually hug either. It breaks them both quite regularly, but it still stays in the trend there. So this is probably telling us there that we need to give ourselves a little bit more room on this one. But we're probably looking at the lower highs there. If we kept those in place there, it's probably the way to go. Move up at a slower pace. So using that 50, which seems too slow, or the lower high there, which is the way to go.
Well, that's a good setup to where we get to, is it late 2024? We know a lot more happens, and we know that the company does rally. That's why it's in its list. But what you had a great amount of feedback on, and what a lot of people said, oh yeah, they were really the emotions that I had. I took that position, I held that position, and exactly what you're describing at that bar, I didn't know what to do. So what I'll do is I'll change the screen share over so you can do that with us again. And we know there's more to the chart. And if you can help yourself, if you're viewing at home, try not to look ahead at the chart, because it does go up, but there will be points where we could have been whipsawed out. We could have been hit down and then stopped out, and then we try to find a re-entry. And this is where a lot of value comes into it. Something I've done personally a lot is look back through charts and go bar by bar and done this, and Gary's obviously done it too. It does really help. It's like, whereas if you're trying to assess these emotions at the time you've got a position on, it doesn't normally work out as well. And that's something Gary and I were talking about separate to this. But hey, there was a circumstance where we hadn't mapped out a possibility. How do we trade that? So let's go, Gary. You've got the bar by bar going on here.
Yeah, just while I've zeroed in here, you can sort of have a look at that handle there, period, Chris, as well. See the volume as well. So, when you do get that bounce up there and it's nice and tight under the high, when you see that really low volume there,
near the 52-week high.
Yeah, that's a really interesting sign there. Yeah. So, just to show a strength there when you see that, it's just something to learn from there. But as we mentioned there, we've got this little 1, 2, 3 thrust down, and we know that this so far has respected just, the higher lows there. So it has pulled back here and had a little bit of a bounce there. So I'd be still nervous about this one, just because that is that's a topping pattern, which I do respect. And that can stop the trend. Just because you've got spacing there and all of a sudden starts overlapping, it's definitely losing its momentum. But as we know, we can get a catalyst that can change that. So we just, as momentum traders there, we just want to probably either, as they use that 10 or 20, or use a swing low there. So this does seem to sort of hold that low in place for a little while here, and then pushes to a new high there. So eventually it sort of does keep going there. So
let's stop you there for a second. Like, we're getting really exponential here, but you often talk about selling into heat, into say 3 days of heat. Killamuggy will do something like it. Well, I was going to stop you 2 or 3 bars ago, but it's gone further now. Would you be selling into that kind of heat if you had position, 10, 15, 20% position of your capital, would you have sold into that?
Yeah, I mean, possibly my emotions might have me selling it. But as a momentum trader, I shouldn't be selling it if I sort of, I mean, depends where I re-add here. I mean, I would have, this pattern here would have had me tightening up. So if I was a little 1, 2, 3 thrust there, I might have actually sold that bar there. Thought, oh, I don't like that bar. So I might have sold some of it there and then just backstop the rest, with looking at, this lower high and this lower high here. So the whole idea of momentum traders is to sort of get that sort of low risk entry on, scale it up, get a bit of a move, take some off, de-risk the trade, get your stop to break even, and then you kind of can relax, So it sounds weird, but getting that sort of heavy position on and just taking a little bit of cream off the top and getting a sort of stop to break even on a reasonable size of that parcel. That's the key. Because once you're sort of in that position, then you can relax a bit more of the trade, You hear it, man. I was listening to, Mike Webster in the last couple of days, there, different interviews there, and he's a professional. He's managed a lot of money there, but he still gets nervous for having these big positions on, and meetings coming out and what's happening, and so even the best traders there are still going to be nervous about having these big positions on. It's sort of so that's why it's important to sort of take a bit of risk off there. But then once you let it go, you've sort of got to let the market, So I think you've got to, as we talked about, sort of create a process there to do there. So, normally I'll be using like a 10 or a 20-day moving average there, but this stock has shown that it hasn't worked for the stock. So I'll be using the swing lows there. I mean, I know when I get away like this, it looks like, oh, it's so far away from the moving average, I probably should sell some. So, you might be selling some here, but, we shouldn't be selling the whole lot because we just don't know how far these things can run. So, I mean, to be honest, when this sort of broke through the 120, and when you got up here to $2 there, you're probably thinking, oh, it's up 80% here. That's probably, and then you see it broke the 20 here. That would have probably knocked me out of some of them for sure. But then the whole thing tightens up again and breaks out again. So whether you come back in again on a break here, this little handle here, I don't know. So, but that might have shook me out there initially, breaking that 20, because I don't really like to sort of see the 20 get broken. But you can see that it kind of really holds it in some manner. Does break it here again. But yeah, but we just learn here. I guess, if we got some of that move, if we got that 80% move, and then we got sort of stopped out at 175 there after a 120, and there's still a sort of 50% profit on that position there, you still might be pretty happy with that. But the thing about these leaders is they can kind of keep setting up. They can keep moving higher. And as it's sort of shown here, the whole thing sort of tightens up and just keeps moving higher. So if we can get a mechanism to sort of keep a little bit open, and that's the thing I love about momentum traders, is that they will take some off into heat. They'll take some off at a certain multiple of their risk, and then they'll try and let a moving average dictate the rest, try and stay with it, because you just don't know. That could be the 10 bagger or the 20 bagger, or you just don't know. So just let the moving average sort of take you along.
Yeah.
So it's there.
Yeah.
Yeah. Okay. So it still starts to sort of congest here. And then we do get a sell trigger here. So this goes through, it's broken the 10 here, but that's not really been, the 20 hasn't been a great judge either. But you do start to see it's pulled back here, second pullback, third pullback there. So the one thing Dan always says too, Chris, is that 1, 2, 3 touches, you go back for a fourth touch, you're going to go. And it's once this starts, this actually bar here does go down for the fourth attempt at the low, that would be telling me, well, this is going to be, you need to be watching this tight as, because that can roll off there. And I think, the price bar, there was a bit of volume, I think, in those 2 bars as well, and pretty light volume on the bounce as well. So we're just starting to see a little bit of weakness there. But even if you didn't trigger there, that you might have sort of just had that sort of gap down there. So this is a bit of a trap here as well, because then normally your stop's going to be just below there.
Get straight through you.
Yeah, so you could basically get through here. So I'm sure this happened to a lot of traders in the past there, where maybe, I mean, we're talking about a low of 329 there. So you might have said, okay, this breaks 327, sell it down to say 324 or something. We'll say it was, and this opens at 325. So if you don't give yourself enough room to sell that stock down in your filter, because with your stops and stuff there, you can program a level,
trigger and limit,
and then you can put a limit of how far down there. Because if you get a big gap through, you might want to reevaluate it, but you shouldn't really be reevaluating too much of a gap. So you really want to be out. So you want to be out quick, because look how once it's gapped through that level, everyone's selling it there. So when you do program your sells, and the thing about this is it has tightened up, and hopefully you're at the end of the move. You only got a small position on. For me, if I saw that gap down, because it's going to gap through that level, then I'd want to be filled there. That's why sometimes on your sort of stops there, try and give yourself a bit of room on the stop too. Give yourself a bit more room. Give that sort of filter a few cents as well, so that you get done there. But you might have found here that there may not have been that much liquidity on the start. So even if you had programmed it, there's a good chance there that you just say you'd sell.
Still be chasing.
Yeah, so let's say you're selling 5,000 shares or 10,000 shares or something, whatever it is. So just say you're selling 5,000 or 6,000 shares for the last parcel. You might have only got half done because of liquidity, So then, then you've got, say, 3 of the 6 done, and you're still holding 3, and this thing's just pulling away. So then you're like, oh, what do I do? What do I do? And then by the end of the day, you're down here. You're broken at 50. So you must get out here. I mean, momentum stop 101, you break the 50, you're out 100% every single time without fail. So you'd be happy. I guess if you're sort of moving down, you might be in hope mode. That's from my experience there, whenever I've sort of been in hope mode, hoping for a bounce, it's never come. Yeah. So you just got to take your medicine there. That's the thing. And the first loss is the best loss there. But it is interesting there that that can happen too. There's really big winners there. When they do peel off, they can really come off pretty quickly. So it has a bit of a bounce. You probably think, oh, I'm back in here, but it's just a bit of a counter move, and this thing starts to sort of fall here. Has a pretty decent pullback there. So that's 360 down to 250. So $1.10. So that's literally almost a third of the stock. And that's what's at about 8 bars or something there. Lost a third of the profit there. And then all that bang, everyone gets drawn back in again. Another squeeze here. But this thing goes through a bit of a tightening phase. So you start to look at this going, okay, well, it's pretty volatile. It's had a pretty decent sized correction there, but it is starting to tighten up. So first leg down, second leg down, third leg down, getting smaller. So okay, well, keep an eye on this. Okay, so this now might have a little, you've got your little wedge in there. And we've probably got, again, another little congestion there. So possibly you wouldn't want to, you could think about these leaders when they have these big moves, you can come back in and trade them again. And sometimes they might just shake up here and come off again, come off there. I know WA1, I've traded quite a few times, Chris. And even though it may not follow through, it'll have a good move. And then if it doesn't follow through, then it will come back. But then so we'll sort of, once it breaks, it does tend to run for a few days and then fail. So if you can manage your stop loss, you still might be able to get a little bit of profit there. If it doesn't follow through, get your rest on break even, then there's still nothing lost. You still can make a little bit of money. But I mean, the idea is the momentum trader is to try and catch those big moves. So you want to protect your capital. If it starts moving in your right favor, then, take a little bit off and then get the rest to break even. So you got nothing to lose. That's the key there, I think, personally. I know when I've had that 2.75 times move and I've taken a quarter off, and then I've got 15% there at break even, I'm going home a small winner. The pressure's off on that trade, but then I can just kind of relax a little bit, just to make sure nothing like no gaps occur, but just watching for that. You can see here, this actually does set up here and does break the little B wave here. So this was 277, I think 276. So you can program, okay, if it breaks above 277, buy it up to 279, 280. So therefore, you're paying within a few cents there. So I think it opens at 275, and it does go through that 277 there. So you might be able to buy it at 278, 279, just allow a couple cents on your filter. And then you might have another re-entry there. And again, you don't know, this has been a strong name in the past. We don't know how far whether it's going to be small or not. So it starts to sort of move here. The volume's pretty, 1, 2, 3, 4, 5 bars there, pretty good volume. So I thought, okay, maybe this can move a bit further than we first thought. Again, you'd sort of gone up 1, 2, 3, 4 good days there. You're looking at, I know Calamagi's are sort of 3 to 5 days. So the first 3 to 5 days of strength there, he's going to take some off here. So, this level here, breaking that level high there is another good sign there. So, maybe this bar here on the close there, around 309 there, that's 1, 2, 3, 4 days up. That's probably, you're probably taking some off there, and then moving the rest up to, in the past that we know the 10 and 20 haven't been reliable there. So we probably want to be looking at swing lows there. So maybe we bump it up to this low here, which is 285. So maybe we put it at 283 or something, just underneath there, which is pretty close to our 50. Gives us a little bit of room anyway. And we'll see what happens. Okay, stays pretty firm, breaks to a new high. So that's a pretty good sign here. So
Where's your stock now?
So I'll be using probably, we'll be trying to use the sort of 20 here at least on some of that. So if I was still along 15% of that, but what this move has done here has gone pretty, a few times there was seeing the stock go up along the 10 and then sort of cool off a little bit. So you could program 5%. So you had 15% of your position on there. You might have 5% there, maybe 5% there. And then the other 5%, we'll try and look at a swing low or something like that, see what happens there. And okay, so the next day we break below it, and that's gone to a new high, failed there. So that would probably knock us out of 5%. Stays firm, goes pop again. So you just we don't know. I mean, that bar there in the past there, that false break in the next bar down, would have been some volume in that. That would have probably shook me out, had me completely out. Because I in the past, I didn't really like false breaks, market going to a new high, then failing. But we see these momentum names, the strongest names, they do all the time. They make little handles all the time underneath, and they kick on there. Look at that price bar there. So this has gone through a couple of those down.
Thrown back with the volume and thrown back.
That volume is strong. So it's like, wow, we're still along, say, 10% of our position there now. So we're using the 20, and we'll probably use that as our, that last low there, because we know that on the past there, the swing lows have been pretty important. So we use that low as, say, 334 for the other parcel. So that's why it's nice to sort of break those parcels up sometimes, because we don't know what's going to happen sometimes as well.
And here you're still moving up with the 20 and the same swing low?
Yes, that's right. We've sort of we've got half on the 20 there, which is up to 373 here. And we're probably still using this swing low, but we're probably thinking, this swing low here, is maybe it's a minor one, but that's, but we might be just giving ourselves a bit of room, or we might be tightening up under here. We still want to give ourselves a bit of room. We've seen in the past there that it does tend to sort of, can break the minor ones there. We stay with this. Okay, so it's broken the 10, so we're a bit worried about we might hit our 20, so it knocks us out of our 20. And we're either sitting back here, or maybe we're sitting in here. We're definitely starting to tighten up here after this move here. But you'll see here, Chris, we've peeled off here, but that selling's not particularly aggressive. And we've known in the past there, cross to 20, cross to 20, cross to 20. across the 20. It's broken the 20, over and over again. So that's the personality of this stock. Okay, so don't freak out. Even though I've taken 5% off here, don't freak out on the last holding, because we know that some in the past there, it's just broken the 20 and then for a couple of days and then bounce back here. So we don't know. So managed to hold here. Okay. So we're now
just about here. We're also getting it up on the launch pad again. That's also happening at the same time. Just running that, but you've got this congestion. So are you looking like you may re-enter? What's going through your mind?
We've still got a 5% holding there from our original position there. If we still we had 5 on the 10, 5 on the 20, and then 5 just using the last swing low, we'd still be basically hanging the last 5 here. So we're now just using the last low at this thing. Okay, that's a little bit of a concern there. Has a bit of a big throwback and then comes back here. So rather here or maybe a little tighter there. So just be watching this. Okay, so now I'm moving this up into here, or maybe I'm actually at this bar here. Here's a bit of a pullback bar as well. This is why sort of sometimes you just got to, we know the personality of this stock there is that it can keep going here.
Now, have you had any opportunity to re-enter, or because it's been toying with the 10-day and the 20-day so much, you stop so close, you're not feeling compelled to re-enter yet? How do you look at that? We're at 52 guys, so we know you want that.
Yeah. I mean, we've shown so far that it hasn't really sold off on any volume there. There was a little bit of a cup and handle in there. See that last little cup and handle there? And then it comes through the handle there, and then but that could have had us on a breakout there, and then we might have got whacked the next day. So it could have knocked us in and knocked us out again. But then it does set up another little handle here as well. A little bit lighter than the volume wise, but hard to say there. You're probably feeling at this stage that you've had a pretty good run, and you've had that 50% move and got knocked out. You've now sort of broke this, so you've bought here at 270. You've managed to sort of stay, you've knocked out some here at 410 or something there. You get knocked out the balance there, maybe at 380 or something like that. And you've held on the last 5% here. You're probably pretty happy. I mean, I know you can't imagine he might be trying to trade this, every time it sort of tightens up in here, the moving average, or, but yeah, it's hard to say here. I don't know if I would be adding to it personally. I'm probably just feeling pretty lucky at this stage. So I've managed to sort of hold this long and hold a parcel this long here. So, but I am just looking at that. Yeah. Edge low there. So even that pulls back there, Chris, and it keeps going again. It's just, so you just don't know here. So,
does that chance to reason with you want that last position? If you end up with a 20% of your capital invested, 4 lots of 5%, you're leaving that last one to run because it could go for a 9, a 10, or a 15 times risk, which might be having hit.
Yeah, I mean, me personally, I probably wouldn't like to sort of see that high get broken as well. So, although we've used the 5 and the 10 in the past, and it hasn't really respected it, and it can just keep making high lows there, I wouldn't, me personally, I wouldn't like to sort of see that there, because we are getting pretty far back here from the moving average there. So, yeah. But, that might be a level you look at there. If it closed below that sort of bar there is that's a pretty nasty looking bar, big volume, breaks through pretty impulsively. So, but yeah, the worst case scenario, you're getting out here. I mean, you're still getting, everyone wants to pick the high, but it's not about getting the high. It's just about getting a high percentage entry, and, being able to scale up. If you get a low risk entry, then you can scale up and then take some off into heat and then let the rest ride. That's what we're trying to do, momentum traders. So you don't know what's going to follow there. So, but when this actually, that's the interesting thing, was actually does break below, then it goes back up to a new high, and then it breaks below and then goes to a margin new high. So there's that. Remember I talked about the little free thrust tie there. So it didn't work last time, But that, yeah, what this is doing here is getting looser. Seeing how this was only really small, they're only small ranges. So, but we know when volatility's the greatest at one or two spots, normally at the low or at the highs. So once you start getting volatility, that's the whole. McLaren talks about that overbalance of the trend. So all the corrections should be sort of uniform or similar size. When you have that bigger correction on the move, bigger percentage drop, that's potential overbalance. So this here is potential overbalance of the trend. So from there it either makes a lower high or it can make a margin new high, which is the theory. Which is and you do see this come back and make margin new highs all the time. So that overbalance there should give you a clue that there's risk. The trends are at risk here. That does make the third high low. Yes, what do you start to see? You start to see volume as well. So you're starting to see sort of signs of distribution taking place here. Some big volume lines there. So some exiting there. So big down days, big volume there. So yeah, and then it does pull back here. Again, this thing does pull back, tightens up here. It actually, if it's a weird thing with that sort of WA1 and Spartan there, they had a few pullbacks. And they did set up multiple times. You're probably thinking it's all over here. That's what you might be thinking, but then it does actually give you a B weight break here. So to me,
3 days into heat.
Yeah. So again, I'll be thinking, okay, this is this is longer than two. That's had a really strong run. That was a bit of a overbalance of the trend, but it can set up again. This can go back and retest the high or make a lower high or go margin new high. So that's always on there. And we know these leaders have got the ability to make that high momentum move. So when they, as much as that's come off from what, 730 down to 450. So, $3 move on just over $7 there. It's a pretty decent move. It's about 40% drop. So it's a fairly decent drop. So, but they can come back here. So, that's a VCP really. And I know you'd probably like to sort of see them more squarer like this rather than deeper, but still that's the first leg, second leg tightening up here. You saw this break up here. Yeah. So if I saw that again, and I've done this with WA1 a few times there, I'd buy that break. But I just wouldn't buy it as hard. But if it's like the fifth or, if I'm pretty late in the stage there, maybe I'm not going as hard there. Maybe I'm thinking, I don't want to go, but if I've had a good time with the stock, I'm probably drawn to it. Because you've had a few wins in the past. So, this will probably get you back in again. So maybe breaking that high there gets you maybe have a 10% position, 1, 2, 3, you take off half into heat, move the rest up to break even, or maybe the 20 here or so, give yourself a bit of room because this thing needs a bit of room. And then we're long the trade here. We're now we've got our break even just above break even. We're taking a little bit off. We got a free carry in the 5 and we just let the market do what it's going to do. So we don't know this is going to stall here and come back or it's going to keep going to a new highs there. That's the beauty of these momentum traders there is we've just got to, it's important to, I just kind of think of the phrase there. It's sort of like you don't, you don't know what the market's going to do, but you do have to know what you're going to do under certain setups there. So that's the only thing that's the only controllable aspect to trading is the actions that you're going to take. So if you have some consistency in what you're doing in your method, then all you're doing is you're just reacting to the market. So you're not trying to force the market. Market's going to tell you. So, it seems you look at some of these biggest movers there, they do set up over and over again. And we've seen it, when Newix had a great move. I mean, Spartan had multiple moves. TUA just had another gap up today, Chris. So that's been a leader as well. So they can reemerge. We've seen some of those. WA1 has reemerged as well. So those leaders of the past, they can go through congestions and tighten up and set up again. So again, we need a low risk mechanism to get in. We want to trade some into heat, and then we want to try and let the rest run. That's the key there. There's no sort of perfect science to what we're going on, but we do know that the best traders on the planet have some sort of consistency in the method. So whether they're using multiple risk, whether they're using selling 3 or 5 days into some heat, whether they're looking at the moving averages, to stay in the trade, take them off. But yeah, there's definitely some, there's a level of consistency amongst the best traders. And if you watch like a lot of the winners from the US investing championships there, most of them are applying very similar methods. They're looking for the leaders. They're looking for the stocks showing relative strength, Chris, which we've been trying to find that for for multiple years now. So we know those stocks that show the relative strength are the ones that lead the market. And it's the classic. People are trying to buy low and sell high. That's not the winning formula. That's not the formula for momentum trading. The momentum trader is to buy high and sell higher. So we're looking for that sign of strength. That's the mind shift you've got to make, is that you've got to be looking for monthly highs, 6 monthly highs, yearly highs, looking for those stocks that are actually showing strength. They're breaking swing highs, they're breaking to new highs. So those are the strongest. And that's most people think they're a contrarian trader. They're not. The real contrarians buying new highs. There's only about 1% of us who want to do that. So that's the thing a mentor is going to train. So it's hard. The hard shift to get into, because our brains, when we look at a chart, when we look at this chart here, we're telling ourselves to buy the top right hand corner
when no one else has bought before.
Yeah. But everyone wants to buy. I want to be buying down at 45 cents or 50 cents down the low. That's the unit. That's one of our natural biases, that our brains sort of take over here, and that's what we have to overcome. Momentum trader there. We want to be basically looking for strength. Bang. Okay. So I was listening to one of my favorite podcasts is an interview with Kobe Bryant, probably the year before he passed away. But his mentality, just he's going through the tape. He just studied his tape. He studied his teammates' tape. He studied his tape. He was just relentless in the amount of groundwork he did. So, he was talking about Beyonce. Beyonce studied every performance she did. She watched it over and over again, studied every finer moment to try and perfect and get better next time. So as traders there, we got to try and study our tape, try and study the way we're trading, how we can improve, and then study the strongest names there, because that's what we want to find. We want to find those leaders, the strongest moves, and what do they do, and what are the setups that keep setting up again. And the one thing, if you listen to Kalamagi, Minervini, William O'Neill, Davis, all the great traders there, it's the same setups over and over again. It's just, we're just learning those same. So relative strength, break into new highs. So whether we're breaking sort of pivot points, B waves, or 52-week highs, or 6-month highs, or 2-month highs, whatever it is, we're breaking to new highs. That's the key. So that's what we got to learn from a momentum point of view. So that's it for the day.
Well, they're definitely the lessons that you're repeating consistently. And 2 key facts out of that is that, like Kobe Bryant, like Beyonce, going back through the most successful or even their worst and understanding your own trades. But Gary's done the hard work. If you want to understand the market leaders, there's a whole list of model books, and this is one of them. So you can go back and use those. And like Gary's saying, if you want to find the best and the strongest companies up near their 52-week highs or their quarter highs, or those that are coiling and compressing, all that kind of thing, we do have that list, and members get that list, and they can filter that every single day. We'll put a video link at the end to describe exactly how that list works, and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.